Welcome to the world of the rich and the wealthy, where the investment game takes a different turn. Here, the path to financial growth is not just about stashing money in a savings account or investing in the stock market. It's about exploring unconventional avenues and venturing into territories that might seem intimidating to the average person. Let's kick off this journey with private equity. This is where wealthy investors plow their money into private companies or funds that provide capital to businesses that aren't traded publicly. In return, these investors get equity, a slice of ownership in these companies. With potential for significant returns, it's like playing the lottery. But remember, this isn't your run-of-the-mill scratch card. It's a high-stakes game that demands a substantial upfront investment and is typically illiquid, meaning you can't just cash out whenever you want. Now let's shift our focus to the second investment on our list, hedge funds. These are not your garden-variety mutual funds. Instead, they are pools of investments managed by professionals who employ various strategies to generate returns. Think of them as financial wizards, conjuring up profits from their cauldron of investments. But, like the entrance to an exclusive club, hedge funds often have high minimum investment requirements and are subject to less regulation. In other words, they're not for the faint-hearted or the light-pocketed. In this world of high-tier investments, it's not just about having money, but also about having the courage and the acumen to make the right moves. It's a world where risk and reward walk hand in hand, where fortunes can be made or lost with a single decision. Now that we've dipped our toes into the ocean of high-tier investments, let's dive deeper. Ever wondered how startups get their big break? They might owe it to our next investment. Dive into the world of venture capital, where risk and reward dance a tantalizing tango. This is the realm where affluent investors partake in an adrenaline-pumping race, providing capital to startups and early-stage companies in exchange for ownership stakes. It's the financial equivalent of a high-speed chase with potential glory for the daring. But make no mistake, this is no place for the faint-hearted. The risks are high, but the rewards, they can be astronomical. Imagine this. You're an investor and you've just funded a small tech startup. Fast forward a few years, and that startup is the next big thing. You're not just an investor anymore. You're a part of a success story. That's the allure of venture capital. It's not just about the money, it's about being part of something groundbreaking, something that can potentially change the world. But let's switch gears and move from the digital landscape to the physical one. Let's talk about real estate syndications. This is where the wealthy invest in real estate projects collectively, sharing both the investment and the profits. It's like a potluck. But instead of bringing dishes, you're bringing capital to the table. And the main course? It's the opportunity to diversify your real estate holdings and access larger, more lucrative deals. You're not just buying a house or an office space, you're investing in a shopping complex, a luxury hotel, or a sprawling residential complex. It's real estate, but on a grander, more opulent scale. It's true, these investments are not for everyone. They require a substantial upfront investment and the risks can be high. But the potential returns can be equally high, making them a favorite among the wealthy. Are you enjoying the video so far? Don't forget to hit that subscribe button and ring the notification bell to stay updated with our exciting content. Our next set of investments are not for the faint-hearted or the uninformed. Let's dive right into the deep end with something called structured products. Now, if you think this sounds like something from a high school math textbook, you're not far off. Structured products are complex financial instruments designed to provide tailored investment solutions. They're like the haute couture of the financial world, custom designed to the specific risk tolerance and return objectives of the investor. These instruments can include a mix of derivatives, bonds, and other structured securities. The potential rewards can be high, but they require a deep understanding of financial markets and a willingness to take on risk. They're not the kind of investment you want to jump into without doing your homework. Now moving on to private placements. Don't let the name fool you. There's nothing private about the potential returns on these investments. Private placements involve investing in securities not offered to the general public. These could be private bonds or limited partnership interests in private companies. Imagine being invited to an exclusive party, where only a select few are allowed in. That's what private placements are like. They're exclusive, often lucrative, but they come with their own set of risks. For starters, they're not as easily bought or sold as publicly traded securities. This means that you might need to hold on to the investment for a longer period before you can see a return. But for those who are willing to take on the risk, and who have the necessary capital, these investments can offer significant rewards. So there you have it, structured products and private placements. Two complex investment strategies that are not typically on the radar of the average investor. They require a deep understanding of the financial markets, a high risk tolerance, and a significant upfront investment. Just when you thought investments couldn't get any more interesting, we're about to prove you wrong. Who said investments can't be fun and enjoyable? Let's delve into a world where finance meets finesse, where portfolios are not just about numbers, but also about taste and class. Welcome to the realm of art and collectibles and fine wine. Imagine walking through a gallery, appreciating art that's not just for your eyes, but also for your bank balance. Affluent individuals often invest in valuable art, antiques, rare coins, and other collectibles. These aren't just items to be admired on a wall or a shelf, they're tangible assets that can appreciate significantly over time. And the beauty of it is, you don't always have to be an art connoisseur to invest. Many wealthy individuals engage the services of art advisors who guide them through the intricate maze of the art market. It's an investment that combines pleasure with profit, a feast for the eyes that also fattens the wallet. But the charm of collectibles doesn't end there. It spills over into the world of fine wine. Some investors with substantial means collect and invest in fine wines, creating a cellar that's not just for savoring but also for saving. Certain vintages can appreciate in value over the years, making them a liquid asset in the truest sense. It's a unique blend of passion and profit, where the love for wine merges with the thirst for financial growth. Picture this: you're hosting a dinner party, and you bring out a bottle of vintage wine. As your guests admire the label, you smile, knowing that the bottle is not just a testament to your fine taste, but also a smart investment that's been maturing along with the wine itself. Investing in art, collectibles, and fine wine adds a touch of class to one's portfolio. It's an elegant dance between the world of finance and the world of fine living. And the best part? You're investing in something you love. If you're finding this enlightening, click on the like button. Your support means a lot to us. As we continue our list, let's uncover the other intriguing investments the wealthy engage in. Next, we have rare metals and minerals. Yes, you heard it right. No, we're not talking about your grandma's silverware. We're talking gold, silver, platinum, and those elusive, exotic, rare earth elements. These aren't just pretty to look at, folks. They're often used in technology, from your smartphone to electric cars. As demand for these tech gadgets grows, so does the value of these precious metals and minerals. A sparkling example of how diversifying your portfolio can shine brighter than a diamond. Next on our list, we dive into the world of structured notes. Now, these aren't your regular IOUs. These are debt securities with complex payoff structures tied to various underlying assets. Think of them as a financial chameleon, changing their stripes based on market conditions. Their payoffs can be linked to a variety of assets, from stocks and bonds to commodities and currencies. It's like having a financial Swiss Army knife in your pocket. But remember, with great flexibility comes great complexity. This isn't a game for the faint-hearted. Next is private equity real estate. This isn't about buying a cute little cottage in the countryside. We're talking big game hunting, office buildings, shopping centers, apartment complexes. These investments are typically made through private real estate funds that focus on commercial properties. It's like Monopoly, but with real money and real buildings. The returns can be substantial, but so can the stakes. Let's continue on our journey of the 15 investments rich people make that the poor know nothing about. Let's delve into some more intriguing investment avenues that the wealthy explore. High net worth individuals often allocate a portion of their portfolios to cryptocurrencies like Bitcoin and Ethereum. Yes, these digital currencies are volatile, but they offer potential for high returns. It's like a high-stakes poker game, but with virtual chips. Moving on, we uncover the world of offshore investments. Some affluent individuals explore these opportunities to diversify their assets and potentially reduce tax liabilities. It's a bit like financial hide-and-seek, with the added thrill of navigating international laws and treaties. Next, we dive into the world of collective investment schemes. These include a wide range of investment funds, such as unit trusts, which pool money from multiple investors to invest in various assets. It's like a potluck dinner, but instead of bringing a dish, you bring your cash and share in the profits, or losses. Finally, we arrive at private banking services. Wealthy individuals often use these services offered by prestigious financial institutions to access exclusive investment opportunities and personalized wealth management. It's like having a personal concierge, but for your finances. These investment avenues offer a blend of risk, reward, and exclusivity that appeals to the wealthy. So, stay tuned as we wrap up our exploration of the investment world of the rich and wealthy. So what do you think about these high-tier investments? We've taken a deep dive into a world where the rich and wealthy play. From private equity, hedge funds, and venture capital, we've seen how they put their money into promising startups and non-publicly traded businesses. We've also explored real estate syndications, structured products, and private placements. We've entered the realm of art and collectibles, fine wine, and even rare metals and minerals. Finally, we've looked at complex structured notes and private equity real estate. Remember, these investments are not for the faint-hearted. They require significant capital, a deep understanding, and a solid tolerance for risk. But they can also offer substantial returns. Thank you for joining us on this journey through the world of the rich and wealthy. Don't forget to check out the other videos on your screen now and hit that like, share, comment, and subscribe button. See you next time.